and coughs through social distancing and increased personal hygiene. Always wash your hands with soap and water and sanitize when you're unable to wash your hands. Remember to stay hydrated by drinking a lot of water too. Don't entertain visitors for now and do the responsible thing by isolating yourself if you've been exposed to an infected person. It is important to obey the stay-at-home order as this will greatly help in containing the spread
Oh,
of
and
the
yeah, feel
virus.
free to
One way
project
to
your voice.
avoid
If I can even shout, just they might so that they might picks you up.
COVID-19 will do more damage than good.
Okay, all
Together
right.
we
I'll
stand,
give it a
and
good
we will
shot.
fight the
Okay,
coronavirus.
thanks.
Just let me know if
Visit
I'm shouting too much.
IBTC.
Business trends beyond the headlines, government policies, macro indices, market movement.
And is
This
it
is
a
IBTC
Salome or Salome?
100.1 in association
Especially
with
Salome.
Stanbic
Okay,
All right.
great.
IBTC.
All right.
What's going on now?
Stanbic IBTC. Moving forward.
Smooth 98.1. You're listening to Smooth Breakfast with Valentine. Now I'm joined by Rutus. He's going to take over business right now. Business Express 91.
Hey, Valentine. Good morning to you, and good morning to everybody out there
Good
listening
morning.
to our Love Music, Love Life station.
That's right.
Yes, yes, yes. So, we are going to be speaking with Efemena Salome, who is part of Stanbic IBT's global markets team. She focuses on the consumer goods sector, and we're going to be talking about consumer goods. Valentine, you're a consumer.
Yes, I am.
Everybody listening to this broadcast is
I
a
consume
consumer.
every time.
Exactly, I'm a consumer. Efemena herself is a consumer.
Yes,
So,
she is.
Efemena, good morning to you.
good morning. Hope you're keeping safe.
Yes, we are. Thank you so much. I hope you are too as well. You know. So
WhatsApp number is
yes,
zero
WhatsApp
eight
number. Yeah, give it to
yes
them.
0809 444 That's the WhatsApp number for your messages 0809 444 On Twitter we're at Smooth981 FM. The hashtag is Business Express 981, and we're streaming live on YouTube. You can send messages there as well.
All right, fantastic. All right, if you may, let's kick things off. How dependent is the consumer goods sector on disposable income?
Well, Rotas, you kicked it off by saying we are all consumers, and really, spending really depends on how much money you have in your pocket or in your bank account. So, very dependent on disposable income. And so, when we are trying to assess the health of the consumer goods sector, really where we want to start from is the health of the consumer disposable income. And in assessing that, you look at the macroeconomic picture where economic growth is at. And if you look at Nigeria, since we came out of recession, economic growth has been quite subdued at around 2%. And obviously, this has an impact on the consumer and its consumer disposable income. You also look at where employment levels are in the economy. Most recent data we have from the National Bureau of Statistics is for Q3 2018, and that showed that unemployment was at 23% and underemployment was another 17%. And you can imagine the impact on the aggregate consumer disposable income in the economy. And lastly, you would look to government spending in the economy to assess the impact on consumer disposable income. And when we look at Nigeria coming into 2020 and trying to just look for positive catalysts for consumer disposable income, we had highlighted the minimum wage increase at the beginning of the year as a potential positive catalyst for consumer disposable income and the consumer goods sector. But as you can see where we are with oil prices today, a number of states have come out to say they will be suspending the implementation of the minimum wage increase. Even on the part of the federal government, they've suspended the increase for employees above the minimum wage increase, and I believe also suspended recruitment for the year. So I think all of these factors, including the IMF forecasting a recession of about 3.4% in 2020 will affect disposable incomes and also the consumer goods sector in 2020 and generally in the near term.
All right, thank you for that. If you're just tuning in, we're speaking with Ifemina Salome, who is a consumer goods analyst, part of the global markets team at Stanbic IBTC. So we're looking at the consumer goods sector. If it's something you just touched on a second there, was unemployment. I have been singing it over and over again on this show that the Bureau of Statistics needs to give us an updated figure on unemployment as far as unemployment is concerned. Do you think it's grown since Q3 2018? Almost everybody else think the number has grown. Well, nobody wants to put a figure on it, but just do you think it's grown? Unemployment has grown since the last updates we saw.
I think we can only make assumptions, and I think the assumptions we will be looking at is the growth in the economy. When you look at a 2% growth in the economy, and you assume that, okay, maybe that translates to maybe 2% increase in employment or in new jobs, and you compare that to population growth and people entering the labor force, I think that suggests that you haven't had enough new jobs for new people coming to the labor force. So we would expect that rate, the employment rate, has increased since 2018 and could only get worse with the COVID-19 crisis that has seen a number of small businesses either shut their doors or lay off workers during this period.
Thank you for that. Okay, I want to talk about debts. Debt has been something that a lot of folks have been talking about, for nations, corporates, individuals. Are there any consumer goods companies, I guess, with sizable foreign currency debts that's giving you any worries?
I think in terms of the listed consumer goods companies, we would be talking about international bureaus with a sizable dollar debt on their balance sheet. You know that international bureaus has just come out of concluded a rights issue in January, where they were able to pay off a substantial part of their dollar debt. But they still have, dollar debt remaining on the balance sheet even after the rights issue of about, I think I would estimate that at about $100 million,
Wow,
which is quite sizable.
it's huge.
And so with the recent depreciation in the currency, in the official market, in the INE window, you would expect them to book some FX losses, and you already saw that happen in their Q1 numbers that was reported in April. And so, the general depreciating bias of the currency continues to put the balance sheet at risk with the sizable dollar debt on the books. Even though I understand, that the debt is hedged, but it still doesn't really change the impact of the depreciation of the currency on the balance sheet.
All right. Again, if you're just tuning in, we're talking to Ifemina Salome, who is a consumer goods analyst, part of the global markets team with Stanbic IBTC. We've gone over how consumer disposable income affects the consumer goods sector, and we just talked about debt. Let's talk about supply chain issues and the consumer goods companies. Have they been affected?
I think it'll be difficult to say for now because I think the major impact we would have been in April, coming into May, and we haven't seen Q2 results. But certainly, when you look at what has happened in the global economy and global supply chains, with a number of countries shutting down, countries like China that had to shut down earlier in the year, and subsequently, the other European countries, you would expect that to affect international supply chains. You can even talk about countries that produce and export grains such as wheat, suspending exports, and how that can impact the availability and prices of wheat for companies that use wheat as their raw materials. And then when you come into the local economy, the lockdown, even though the ports were open, just the general backlog, in fact, state border closures would sort of slow down the supply chain and the movement of goods and services. So would obviously expect to see some impact either in terms of supply or in terms of the prices of these goods and services amidst the ongoing crisis.
Okay, thank you for that. Okay, so that being said, are there any consumer goods stocks that you like that look attractive, despite the environment we're in right now?
I think for us, we've continued to highlight our preference for Nestle Nigeria. And I think that was based on the fact that coming out of a recession and the slow recovery in consumer disposable incomes, we expected that food will continue to be the better performer in consumer spending because it's the staple compared to more discretionary spend like beer, for example. And so that was one reason why we had a preference for Nestle, given its robust food and beverage portfolio. Another reason is Nestle's robust balance sheet. Coming through the last devaluation, it has significant dollar debt, which it has since paid off at this time. So it has a clean balance sheet that more times than not in a net cash position. Lastly, I think when you look at Nestle compared to other consumer goods companies, Nestle has been able to recover its margins to levels that are even stronger than pre-devaluation and recession. And it really just goes to show really the quality of the management, the quality of its route to market, the quality of the balance sheet. I think that being said, the risk we've highlighted to consumer disposable incomes, Nestle is not immune to that. And we also look at the fact that we've seen increased competition in the consumer goods sector since the recession. So it almost seems like the consumer sector may be shrinking, but competition is increasing. So Nestle will also not be immune to that. But I think until now that they've shown a level of resilience in their performance, they've shown a level of outperformance to peers that we continue to say demands a premium to peers. So we certainly have a preference for Nestle Nigeria at this time.
All right, thank you for that. Again, if you're just tuning in, we're speaking with Efemena Salome, who is a consumer goods analyst with Stanbic IBT's global markets team. Just said that we're talking about the consumer goods sector. Asked her which particular stock she likes. She likes Nestle, but remember, for any stocks that I mentioned on the show, do consult a financial advisor like a Stanbic before making any decisions. I think we have a message from AIE. Yeah.
Yes, AIE says there's a challenge with using only GDP to measure disposable income because it's an aggregate figure. Countries like Nigeria should devise better metrics to measure its economy. Unemployment should be key.
Unemployment. Over and over. Thank you for that, AIE. Okay. Something that I saw yesterday. The managing director of the IMF, Kristalina Georgieva, she wrote an article which she advised banks to suspend paying dividends and also not to participate in any share buybacks in order to build buffers to protect them from the volatility that we're seeing right now and how companies are being affected. Can we extend that conversation to other publicly listed companies, even consumer goods companies that you cover and everyone else beyond banks? Well, what do you think?
As you mentioned, it's an advice. And I think the reason why this focus is on banks has to do with the prevalence of systemic risk in the financial sector. And that has to do with, how the failure of, one bank can, be systematically, impact other banks and ultimately the economy in any country. But I think when we look at banks, the CBN already has rules in place regarding the payment of dividends, such as meeting the minimum adequacy requirements rules, and also having NPLs below 10% and similar metrics like that. And now when you look to other industries. I think research has shown that the systemic risk in other industries, like the consumer goods sector, for example, is not as significant as the banking sector, the financial sector in general. Ultimately, it's a good advice. Cash is king in periods of volatility. And that's why you would see for consumer goods sectors where capex, for example, could be significant in periods like this. In order to manage their cash, they will reduce or completely cut capex in periods like this. So it's a notable and worthy advice. But I'm not sure it is something that needs to be systemic at this time, as each company will make that decision for themselves.
All right, thank you for that. Okay, Modupe has what's Modupe saying here? Check out. I think Modupe is saying it's not relevant. Check.
Yes, Modupe says the IMF lady statement is not relevant to Nigeria.
Oh, my Andy.
Andy says, "Good morning, Smith FM. We can't overflog this issue. At the end of the day, overdependence on US dollars and power supply affects these things negatively."
Very true.
Yeah, he said, what of Nestle's PE ratio to other consumer goods? What's their dividend yield?
I think it's pretty healthy. I have to take a look at their figures with regards to their PE ratio, but I think it's pretty. If Nestle's PE ratio dividend yield compared to the other consumer stocks, that's the reason why it's a pick. Yeah, those are pretty healthy.
And in terms of Nestle's PE ratio, note that Nestle has always traded at a premium to other consumer names. And really the premium, and I think the PE ratio is somewhere around 19 times or 18 times at this period.
Okay.
The reason for that premium to other consumer goods names, it's just its outperformance. It has delivered in terms of earnings growth. It has delivered in terms of dividend payout. They typically pay 100% of their earnings every year. And so investors have continued to reward Nestle, and that's where the premium comes from.
All right, thank you for that. Well, what was also Koro saying?
Koro said there are investors banking on the dividends. Moratorium on loans has been increased. Principal repayments deferred. Intervention granted. Give us our dividends,
he says.
Wulu says, good morning, Smith FM. The GNP, that's gross national product, is a better measure of our productivity than the GDP. Our GDP only measures economic activities, not the contribution of Nigerians to the Nigerian economy.
Thank you for that, Dele.
And Frank says, hi guys, good morning. Rotus, trust that's the spelling, yes it is. He said, you want to kill pensioners? Please, no extending to other companies.
Banks need buffers, so he also wants his dividends. How much time do we have, Valentine? About what?
50 seconds.
50 seconds. I think I should spend the next 50 seconds thanking Ife. Instead of asking, I had two more questions for her, but we run out of time. Ifemena Salome, analyst, consumer goods analyst with Stanbic IBTC. Thank you so much for joining us and giving us an update on the consumer goods sector. And we hope we can speak with you again soon.
Well, thank you for having me.
Hi, FA. Bye, FA.
Valentine is saying hi and bye.
All right, bye, guys.
All right, bye. Take care.
Thank you, Rotus.
All right, thank you, everybody, for your messages as well. We appreciate you, and I'll see you tomorrow for Tech Friday.
Yes, please. How can they contact you on Twitter?
Oh, Roots and Quotes, ROTANKWIOT.
All right, stay tuned to Smooth Breakfast. Good morning.
Thanks, Ife.